so this is going to be a training video on how to fill out the executive summary.
Okay.
So a lot of stuff on here, like we just said, is self-explanatory, but on top, obviously the first part, we have the broker, and that is whoever is bringing the deal to you.
Yes.
Okay. Their contact information. It's cool when they put their phone number and their email. You know, it's easier for one of us to get back to them. Alright, type of loan. This is easy, but I get a lot of people that don't get this. Obviously, there's a drop-down menu. You can select 3 things. So the first option, well, there's 3. There's cash out refi, refi, and purchase, right?
Yes.
Okay.
Pretty simple stuff.
Yeah.
A purchase is a purchase. A refinance is just refinancing your loan that's probably come due or you're looking to get into a better term. And a cash out refinance is you're refinancing a loan but you're getting cash or equity that you might have in the property.
Yeah.
You're getting cash out to use your cash. So. Okay.
I just see a lot of people when they will do a refinance, they really mean cash out refi. They just don't select that.
Yes, they'll just do refinance.
Okay.
Yeah.
Alright, so then we have type of loan request, and there's 3 on there as well. So there's, help me out, bank alternate stated, and there's bridge loan, and then what's the third?
And then there's full doc, a bank type program.
So full doc would mean it's a bank program that they're applying for?
They can either, they're looking for a bank type loan, they're a bank type client, or they're looking for bank alternate, maybe they're just missing at the bank, or hard money or bridge.
Okay. So the bank alternate stated is obviously our core program.
That's our core program, is bank alternate, yes.
If they were looking for, if they were really trying to apply for the 1 to 4 unit program, what would they select?
A bank alternate.
Okay. And then obviously for the easy hard money they would select bridge?
Yes.
Okay. Alright, that's out of the way. So we have requested loan amount. That's pretty easy. Fair market value.
Fair market value for the novice is just what the property is worth.
Yeah. Okay. One thing that I see that people don't fill out is the year purchased.
Okay.
So why is that important?
The year purchased on the executive summary is very, very important on the refinances because it's going to give us an idea if it's a realistic value when they say what their property is. So if somebody says my property is worth $500,000, but they just bought the property last year for $50,000, a lot of red flags will go up. What happened? Did they add square footage? Was it a complete demo, or did Walmart move in across the street? Now they're thinking, hey, my property's worth $500,000. Well, their property value probably went up, but it'd go up 10 times in a year. So the purchase date is important, and purchase price.
Okay.
On refinances.
Yeah, I just want to say, I also see sometimes people don't, we have to have people actually fill out this whole thing. Sometimes people don't even put, you know, a purchase price on there or the existing mortgage. I think it'd probably be important that you want to know the current rate just because obviously if it's lower, why are they coming to us? Absolutely.
You want to know what the existing mortgage is, that's really important, and you want to know the current rate as well.
Okay. Use of funds. Only if cash out refi, how important is that?
Use of funds is extremely important, especially the larger cash out they're getting. Somebody's asking for $200,000, $300,000, $400,000, $500,000 cash out. The first thing that an underwriter is going to want to know is where is that money going? Is it a rehab? Is it to buy new property? Is it to debt consolidate? Is it working capital for their business? Is it to buy some equipment? Always fill out the cash out if there's a cash out request. Always.
Do they have to prove that?
Sometimes, yes.
Okay. Alright, another big thing, loan to value ratio, which I guess we could figure out ourselves, but you know.
Yeah, loan of value is how much money do we lend based on what the property's worth.
For the fair market value.
The fair market value. Our loan to value is 75%. So, easy math. If it's $100,000 value, we're going to lend $75,000, and that doesn't work. That's just for easy math. Obviously, we don't do $75,000 loans, but that's the simplest math that we could do. So we do 75% of what a property's worth is what we'll lend
on the core bank alternate program.
Yes.
On the other ones, it'll vary. 65 and 70.
Exactly.
Okay. So property type, a lot of people don't fill this out either. There's a lot of options in there.
Property
you know?
type is important, and be as specific as possible. There's a note section.
Property description.
Yes, property description, a lot of brokers tend not to use property description, and it's so important. Commercial is not an answer. We do commercial, that's all we do. Mixed use is not an answer. What does that mean? Is it 3 apartments and 2 retail? Even retail, tell us what the store is there, because the more in-depth the property description is, the faster we can get to a qualification. Either we can do it or we can't do it.
Yeah.
For instance, you may get somebody saying, hey, it's a mixed use. Okay, well, if it's a restaurant in there, I can't do it. If it's a dry cleaner with chemicals on the property, that's an environmental concern. I can't do it. So mixed use, we would go out and gather all these documents to find out it's a deal that we can't do.
Yeah.
Property description is vital.
A lot of people have come to me and said the property type is commercial, it's industrial building, and then I keep trying to get from them what companies run out of there.
That's a great question. If somebody says it's industrial, light industrial, what do? They manufacture tires. What is it that they do in there? And that'll help us qualify or disqualify it, so we don't waste a lot of time. When you get into weird property types or industrial, I always say executive summary. I'd also like to see some photos as well.
Okay. But that's basically a deal breaker. I mean, like you've told me before, if we couldn't get insurance on the property,
Yes.
say like if it was industrial and they're doing a lot of heavy work there and who knows what's going on,
Yes.
then we wouldn't be able to fund, So that's why it's important that's filled out. Alright, obviously we need the property location, which is the address.
Please use the full address too.
Yes.
We do have some population requirements.
Okay.
So it's real important, street address, city, state, give me the full address, not just the state or the city.
A lot of times I see people that don't fill in the credit as well, which we need since we have credit requirements.
If you don't have their FICO scores, the actual credit scores, somebody's going to know if their credit is good, fair, or bad. They're going to know. Put that there. It's important. We just don't want to spin our wheels on deals that we can't do.
Yeah, and we actually have a video too on how to pull your own credit that I made. But we have that form too that people could sign.
Yes.
Could we pull their credit then?
We can pull their credit with a consent form.
Okay. Alright. Borrower income is the next thing. Why do we need to know their income?
We just need to know their income to see what they qualify for. I mean, income is one of those, what gets a loan, credit, income, and collateral.
Okay.
We want to know what their personal income is. We're going to want to know what their property income is.
Okay. So that's the next one, property income. Like on this one, it's currently nothing because the property's not making anything.
If the property's not making anything, we need to know what the compelling factor is that they're going to be able to service the loan. So maybe they have phenomenal personal income coming in so they can service this debt, or other rental properties. We globally underwrite, so let's say the property, we don't like vacant properties right now, but let's say the income may not be there, but they have phenomenal income coming in from some other place, we might be able to do the loan.
Okay, what does DSCR mean?
Okay, DSCR is debt service coverage ratio.
Okay.
What that means is, what is the reserve that we're going to need to feel comfortable with them being able to pay us back?
Okay.
And reserve, I mean, the property, simple math. We, say on a multifamily, on an apartment complex, we usually want a 1.2 debt service coverage ratio. Okay, what that means is, what is the reserve? The reserve on a 1.2, what that means is we want 20% income more than what the loan payment would be.
Okay.
So let's say that the property was throwing off $1,000 a month in income. Okay, well, let's say that, I'm sorry, let me rewind. Let's say that the loan payment is $1,000 a month.
Okay.
I would want that property to at least have income of $1,200. That's 1.2, or 20% reserve. So that's very typical is what you'll see. Now, if it's unique property types aside from multifamily, or it's mixed use and other property types, that debt service coverage ratio is going to go up. Sometimes it might be 1.3 or 1.4. So again, $1,000 mortgage payment, we're going to want, if it's 1.3, we're going to want $1,300 in mortgage, in rent coming in to cover the debt.
Okay. I never see that filled out on here.
for the novice or for the borrowers, they're not gonna know.
Yeah.
So we'll do that in-house.
Also another big thing, why do you, we have on here, has the loan been submitted somewhere else? Why do you want to know that?
Okay, we want to know where the loan's been submitted. It's not a disqualifying question if they are shopping a loan. Hey, it's shop. You know, you shop. You have to in this day and age. But we want to know. I mean, we want to know if they're going to their bank. We want to know if they're going to other firms, just so we know what we're up against.
Yeah, like on this one, she told me that they went to a bank and they got denied because they could only do it 15 years, but that's good for us to know.
It's good for us to know if there's a denial and why, because it'll save us a whole lot of going down the road when we know why the bank may have turned down that loan.
Okay, then loan summary and notes. We always want people to fill this out just so we can get the full story behind.
Always use the note section. Tell us what's going on. Was there a divorce? What's going on with the credit? Are you in a modification? Is the business doing well? Is the business doing terrible? Was there any bankruptcy situations? Was there any mortgage default situations? Give us the good, the bad, and the ugly in there. I mean, we want it all in that notes section to get to know this borrower in this deal.
Okay. And a lot of people told me that they didn't have enough room to type, so what they could do is when they send this executive summary to one of us, they could just email us.
They can email us or put another attachment, you know, C attachment, and put a write-up on the loan.